And the reason the risk of assignment or being able to buy 100 shares of stock is so important to know when you're doing short puts is people just go out and think, hey, I'm just going to start selling puts and making money and, I'll just sell as much as I can. So here's a quick example of why it's important to understand assignment, to make sure it's a stock you like, and also make sure you have at least enough money in your account to buy 100 shares of stock if you are assigned it, because it's entirely possible it will happen. So I went to the biggest stock just to give the best example. In this case, it's Priceline. As of the making of this slide, the price of the stock is 18.18, so it's a huge stock. And let's say, as a starting trade, we sold the 17.15 put. So look at that. We're almost $100 below the price of the stock right now, and we're only 46 days away from expiration. So 46 days from now, if the stock doesn't drop $100, if it stays above 17.15, look, we're going to get to keep over $1,100 in profit. You say, hey, that sounds awesome. I'm going to do this all day long. I'm going to sell puts in Priceline, collect $1,000 a month or $1,000 in 46 days because there's no way the stock's going to drop below 17.15. Well, it happens. We all know the stock market crashes, it goes up, it does all kinds of crazy things. So if by some crazy thing, by some crazy example, the stock were to drop below 17.15 at expiration 46 days from now, what happens? Well, guess what? We're going to be forced to buy $170,000 worth of stock. And the reason the price here is this number as opposed to 17.15 is because, remember, our put is 17.15, but we collected this amount of money right here. It's 11.10 per share. So our actual cost basis is 1703.90. So when we're assigned the stock, we still keep the credit. So 1703.90 times the 100 shares gets us to this number. But this is the important thing to realize. You are on the hook for 100 shares of stock. So once again, it's going to be a stock you want to buy if you have to. And secondly, and more importantly, it's got to be a stock you can afford to buy. We're not selling puts in stocks that are $1,800 because if things go against us, we could get stuck buying $170,000 worth of stock 46 days from now. That is something we have to be fully aware of. And again, we have to make sure our account can handle buying 100 shares of whatever stock we're selling a put in exactly for this reason. If we get assigned, can I afford to buy 100 shares of that stock?